Hello everyone, my name is Nguyen Duc Hiep, and today I will present our research on integrating time series analysis and artificial intelligence models to forecast banking stock volatility in Vietnam. This is a collaborative work between the Faculty of Technology and Data Science, the Institute of International Economics and Business at Foreign Trade University, and Vietcombank. Here is an overview of my presentation. I will start with the motivation behind this study, then move to our research objectives, a brief literature review, our methodology, key results, forecasting outcomes, and finally, the conclusion. Let's begin. Why do we focus on banking stocks? In Vietnam, large banks dominate the stock market. Their market capitalization accounts for approximately 40% of the total VN index value. This means that when banking stocks fluctuate, the entire market is affected. However, stock prices are inherently nonlinear, dynamic, and chaotic. They are influenced by macroeconomic factors, government policies, and investor sentiment, all of which are extremely difficult to predict. This creates significant risk for investors and can even lead to systematic risk at the macroeconomic level. Traditional forecasting models like ARIMA or GARCH have clear limitations. They only work well under specific conditions such as linearity or conditional volatility. This is where deep learning comes in. Specifically, the long short-term memory network, or LSTM, has shown remarkable ability to capture both short-term and long-term dependencies in time series data. Our approach combines LSTM with moving average technical indicators to enhance forecasting accuracy. Our study addresses two main research questions. First, how does integrating technical indicators affect the forecasting performance of LSTM models? Second, among all the combinations we tested, different indicator types, time periods, and training epochs, which one yields the highest accuracy? To answer these questions, we built and evaluated multiple hybrid models combining LSTM with three types of moving averages: SMA, EMA, and WMA, calculated over 5, 10, and 20-day windows, and trained at 100 and 150 epochs. We then used the best model to forecast TPB stock prices for the next 3 months. Let me briefly summarize the key findings from existing literature. First, numerous studies have confirmed that LSTM significantly outperforms traditional models. Some research reports RMSE reductions to up to 85% compared to ARIMA and GARCH. Second, when technical indicators are added as input features to LSTM models, forecasting quality improves substantially. The coefficient of determination R-squared increases by 0.12 to 0.22 points, and in one notable study on Chinese banking stocks, RMSE was reduced by 83%. Third, hybrid architectures combining LSTM with CNN, by LSTM, and attention mechanisms achieve very high performance, with MAPE values as low as 1% and R-squared above 0.95. However, in the Vietnam context, research applying these advanced methods to individual bank stocks remain very limited. Most domestic studies focus only on market indices like VN Index or VN30. This leads us to the specific gaps our study addresses. No prior research in Vietnam has focused on forecasting an individual bank stock using LSTM combined with moving average indicators. There have been no systematic comparison of SMA versus EMA versus WMA across multiple time frames under Vietnamese market conditions. Domestic studies have largely relied on LSTM without exploring advanced configurations and the evaluation metrics used in existing work like diversity. Our study fills over these gaps using TPB, Thiên Phong Commercial Joint Stock Bank, as our case study. Here is our overall research workflow. We collected daily closing prices data for TPB stock from August 2017 to July 2025. That gives us 1,811 observations over nearly 8 years. The data was cleaned, ordered chronologically, and missing values generated by moving average calculations was removed. We then engineered features using SMA, EMA, and WMA with 3 different window sizes. All data was normalized to the range 0 to 1 using min-max scalar. We split the data 80-20 for training and testing, then trained LSTM models with 100 and 150 epochs. Finally, we evaluated each model using 4 metrics: MSE, RMSE, IMPE, and R-squared. A quick look at our dataset. TPB stock prices range from about 4,800 Vietnam dong to over 21,000 Vietnam dong during the study period, with a mean of approximately 11,000 Vietnam dong. The distribution is relatively symmetric. Skewness is 0.17 and the kurtosis of negative 0.99 indicates a flatter than normal distribution. This means prices are fairly evenly distributed around the mean without extreme outliers, which provides a solid foundation for model training. These are the 3 moving average indicators we used. SMA is the simple arithmetic mean over n periods, straightforward but slow to react. EMA gives exponentially higher weight to recent prices, making it more responsive to new information. WMA applies linearly increasing weight, placing more emphasis on recent data while maintaining some sensitivity to older observations. We tested all 3 with window sizes of 5, 10, and 20 days, giving us 9 feature configurations in total. Our LSTM model consists of 2 hidden layers with 50 units each. The input is a sequence of 10 consecutive trading days, and the output is a single predicted price for the next day. The LSTM works through 3 gates. The forget gate decides what information to discard. The input gate determines what new information to store, and the output gate controls what gets passed to the next layer. This gating mechanism allows the network to selectively remember or forget information over long sequences, which is crucial for financial time series where both recent trends and long-term patterns matter. We trained using the ADEM optimizer with MSE as the loss function, running on Google Colab with an NVIDIA T4 GPU. Now let's look at the results. This table shows the performance of all models trained with 100 epochs. You can see a clear pattern. As we move from 5-day to 20-day windows, performance improved significantly across all metrics. The standout result is LSTM combined with SMA20, highlighted in bold. It achieves the lowest MSE of over 100,000, the lowest IFSE of 322, the lowest MAPE of just 1.67%, and the highest R-squared of 88.23%. This means the model explains nearly 88% of the variance in actual stock prices with an average prediction error of less than 2%. Let me summarize our key findings. The best performing model is LSTM plus SMA20 with 100 epochs. 3 important insights emerge from our experience. First, longer moving average windows consistently outperform shorter ones because they filter out short-term noise more effectively while preserving the underlying trend signal. Second, SMA and EMA produce more stable results than WMA. Although WMA is more sensitive to recent prices, this sensitivity also makes it more susceptible to noise. Third, and perhaps surprisingly, increasing epochs from 100 to 150 did not improve performance. In many cases, it actually decreased accuracy, suggesting overfitting. This tells us that model evaluation must balance accuracy with generalizability. We also identify LSTM plus MSE10 as a strong alternative for short-term forecasting scenarios where rapid market response is needed. Using our best model, we generated a 3-month forecast for TPB stock. In the first month, we expect prices to consolidate between 14,500 and 15,200 Vietnam dong, with possibly technical corrections from profit taking. In the second month, the model projects a strong rally, potentially breaking over 16,000 Vietnam dong and moving toward 17,000. By the third month, the uptrend is maintained with a target range of 17,500 to 18,500 Vietnam dong per share. The overall outlook is positive, supported by recovering credit demand in the banking sector and stable macroeconomic conditions. However, I want to emphasize that these forecasts assume no major external shocks. Based on our forecasting results, we offer 2 strategies. For short-term investors, buying during pullbacks around 14,500 to 15,000 Vietnam dong with a profit target nearly 17,000 Vietnam dong could yield attractive returns, but a stop loss below 14,000 is essential for risk management. For medium to long-term investors, the sustained 3-month uptrend supports a hold strategy, especially given TPB's reasonable valuation compared to sector peers. Of course, risks remain, including monetary policy changes, global market volatility, and shifts in investor sentiment. Risk management should always accompany any investment decision. To conclude, our study makes 3 main contributions. First, we demonstrated that LSTM combined with SMA20 at 100 epochs is the optimal configuration for forecasting TPB stock prices, achieving a MAPE of just 1.67%. Second, we systematically compared 18 model configurations, providing clear evidence that longer smoothing windows and simpler moving averages perform best. Third, our 3-month forecasting indicates a positive growth trend for TPB stock. We acknowledge limitations. We study only 1 stock and did not compare with GRU or transformer architectures. Future research should expand to more bank stocks, incorporate external variables like interest rate and exchange rates, and explore multi-source hybrid models. Thank you for your attention. I believe our work contributes meaningful evidence for the application of deep learning in financial forecasting in Vietnam. That's all. Thank you for listening.